Refresh Franchising, the heroic choice for entrepreneurs, proud sponsor of the Distilled Wisdom podcast.
Thank you for joining me in Adam's Corner. This is the second installment out of 3 discussing leaving corporate America. We're going to discuss avenues of leaving corporate America and starting your own business. In this episode, we're going to go into a little more specific about picking your industry, evaluating your market, and coming up with that basic strategic plan to go into business for yourself. In the last episode, I mentioned that you should be putting together a list of your skills and comparing them to what's necessary for the type of industry you're considering, or evaluating your skill sets overall. I'm assuming you have this list and that you've put this together and you know where your strengths and your weaknesses are. What you're going to want to do with that is start thinking about businesses that you could see yourself in. This doesn't necessarily have to be something that you're extraordinarily passionate about. I know they say that all the time, that you need to be passionate about the business and you really have to love what you do. The reality is people normally that are successful in business, they're passionate about running a business. So the actual widget or service, that they're offering the general public isn't necessarily the most important part. It's the fact that they're growing, they're learning, and they're developing themselves into a leader in their business. So what you want to look at is different things in the market that make sense to you. So is it a service or a product that you feel you can run with? The first step in evaluating this is picking and making a list of different things that might interest you. These can vary drastically. You really want to hammer this down first into a couple different categories. You're going to pick between generally a physical product, meaning that you're selling a product to the general public. This can be brick and mortar, or through the internet. So, if you're starting an Amazon store, for example, that would be a physical product sold online, right? And if you're doing a digital product, which is the next category, digital product's a little bit different. If you're doing a digital product, what I mean by digital product is going to be you're selling a course, you're selling educational materials, you're selling a book, something that is digital online that you can download or share, right? Sell access to, so like a training course or something along those lines. And then you have a service offering. So service offerings can kind of cross the boundaries between both of these. They could be physical or digital. By digital, I mean you could be working through the internet and selling a service like marketing services. You could do coaching services. Really, there's a number of different services that you could provide through the internet only, right? So you're not physically going somewhere and actually providing a service. Then there's a physical service that you're providing to a client. An example of this would be what I actually do, and that is physical services for property management companies. I have 4 different brands that provide different physical services such as painting, bath refinishing, carpet cleaning. But this list could go on and on and on. You could do consumer-made services. You could do poop scoop pickup for clients. You could do landscaping, pest control. Those are home services, but you could also provide accounting, services to businesses. This is really going to boil down to, in any one of these categories, what results you got out of your skill sets. So you don't necessarily have to stick with your skill sets out of that list and where your strengths are, but you're more likely going to be successful if you stick with something that you already have a basic foundational understanding of. Granted, providing the widget or the service isn't necessarily the most important part of business. It's understanding the business aspect of things and how to properly build a business that has value behind it. So the product or service, though very important, you have to learn that if you don't already know it. So the leg up you have is if it's something you're already familiar with, a product, service, whatever it is. The benefit to having an understanding of that product or service is it gives you a leg up, and it's going to help you expedite your start of your business. So there's a couple things to consider when you're looking at the differences between these. if you're doing a physical product, meaning you're selling a widget, right? They use the term widget. If you follow any kind of business or you read any kind of business books, they just call it a widget. So if you're selling any kind of physical product to an individual or to a business, you have to make a couple decisions in this part, and this will go into the strategic planning, which we're going to talk about a little bit later on in this episode. But physical products require a little more capital usually for you to get going. You have to build up some type of inventory. If you're doing brick and mortar, there's a large expense there when it comes to brick and mortar. By brick and mortar, I mean you have an actual storefront, so you actually have somewhere where somebody can walk into physically and purchase your product or products. So if you're doing a clothing store, for example, there's a lot more startup costs associated with that because of the inventory, the lease or purchase of the retail location, and things of that aspect. Of course, in modern times, you could do this through the internet without having a physical location. There's a number of considerations to take in there. This isn't my space, so I'm not going to get too granular when it comes to physical products. I don't offer physical products myself, but there is a lot of ways to make money there. There's a lot of avenues that you can go when selling a physical product. You have Amazon stores. You can start your own online website, Shopify store, so on and so forth. But that's one area you're looking at. Then you have digital products. Digital products are hugely profitable. The margin on these, because generally what you're doing is you're creating something and then you're selling that asset off to other people. So I don't want to get into like NFTs or anything like that, but that's essentially what an NFT is it's a non-fungible token, meaning you're purchasing rights to that asset, but it's a digital asset. There's a number of different digital assets, though, that you can consider selling, such as, an online course. This is one of the reasons these are so profitable is you create whatever the product is, right? So say it's an online course, you create this course and then you sell that course, right? So once it's created, there's no acquisition cost for you to get more product in, right? You have that product, you just have to continue to sell that product, and delivery on it's very inexpensive. You don't have to deal with shipping costs, things like that. They just download whatever your product is or get access to the online hosting program. There's expenses, though, to consider with this, just like anything else that you're selling, especially in today's world. Obviously, digital products, you're mostly going to sell online. There might be some exceptions to that, but for the most part, you're selling this product over the internet, and it involves the same marketing spend that if you're selling a physical product at the very minimum, right? And depending on the cost of your product or service, these marketing spends can really start climbing. So you also have to build an audience usually when selling something like this. So you have to do essentially what I'm doing with the podcast. You have to do stuff like this. And you have to build an audience that is going to follow you and then sell that digital product. There's exceptions, obviously. You could write a very good novel and you could sell that digitally only. That one could cross both. You could sell it as a physical book as well. But you have that investment in producing the original asset. That can be time consuming or it could be relatively quick. It depends what you're selling. Just understand when it comes to a digital product, the quality of the product is really going to drastically control how much you sell. Even if you have the best marketing in the world, you might sell a bunch of them, but you're going to get a low rate for them. So your margin's going to end up shrinking because you have to spend so much to market the individual item. So digital products are an excellent way to go. Then you have services. And I'm a big proponent of services, obviously, because that's the space that I'm predominantly in. And I sell services, and I love these because the bar to entry is generally very low. And this is one of the things that you can very easily bootstrap if you needed to, though that will slow your progress in growing a service offering. But generally, you have to acquire some skills in whatever the service you're offering. For example, if you're going to open a plumbing business, you have to understand plumbing and you have to learn plumbing along with a bunch of other aspects related to the service that you're offering. But services generally have a relatively low operating cost, and they're one of the top ways that people become a millionaire in this country. A lot of people don't realize that there's a couple key categories, one of them being real estate. And real estate's a fantastic area to go into. That's more of an investment than a business when you're looking at the real estate asset. But the business side of that would be managing the actual real estate. But a lot of people actually get wealthy in real estate without really managing it. They farm that out to a management company. So the business itself would be a service, right? So it kind of falls into the service offering, the people that make money offering the management services. There's so many different types of services that you can start. And again, the bar to entry here is relatively low. There's a lot you have to build out with a service to properly scale it. And there's a lot you have to do in order to ensure that you have value in that business. But this is number 3 on the list of millionaire producing industries. So regardless what service you're going to offer, this is a very good avenue to go into. And again, I'm a little bit biased because I'm in this space. So obviously, I'm a big proponent of it. So I also want to kind of touch on the fact that a lot of service businesses are very boring. And when you're selecting a business to go into, it doesn't really have to be a sexy business, right? This doesn't have to be anything fancy that is new or, that you came up with from scratch. Really, a lot of those millionaires that I mentioned in the service category, they're in these boring businesses. So things like pest control, right? Unless you're really into pest control, it's pretty freaking boring. Same with cleaning, right? Cleaning's one of the most successful service businesses there is out there. I own a janitorial company, and it does extraordinarily well. These boring things can be your pathway as long as you're okay working in those spaces. So that's a consideration you're going to want to have also is, am I okay doing whatever this product or service is, right? Am I okay with selling? For example, if you have a moral quorum with sex toys, then don't sell sex toys. Obviously, you're not going to be happy in that business if you're talking physical product, right? So, on the same note, if you're not okay with crawl spaces, don't go into a home inspection business. If you're not okay with scrubbing toilets, don't go into a janitorial business. So pick something that is going to be okay with you. You don't have to do the service itself. You don't have to provide that service yourself once you scale the business. But depending on how you're starting, be prepared to, get out there and put some elbow grease into this business. So next thing you want to look at and you want to consider when making this decision on what type of business you're going to go into is the demand for that product or service that you're going to be offering. You want to look at the market. You want to evaluate and find out if there's actually demand for it before you invest any kind of money into this business, right? You don't want to drop your life savings into something that isn't going to sell. There's a number of ways to do this. You can run a survey. This is a very simple way for you to find out if this is a viable business for you or not, if this is actually going to make money. But you want to look at a number of different factors throughout that survey. You can do things like run a simple marketing campaign very inexpensively to see if you're getting any engagement about your up and coming business, even if you don't open it, right? So you can come up with a basic logo, basic name, and you can run a very inexpensive campaign and see if it gets any traction, see if you get any engagement, see if you get any inquiries for your product or service. This is crucial that you understand if there's a demand for your service. Another way you could do this is simply by asking. So go around to your friends and family and see if they would purchase your service. Do your own survey. If you don't have money to put into paying a survey company to go out there and evaluate the market for you, you can go out and literally go do some Q&As in a public square, go to a fair, go to anything like this and just ask them to answer a couple questions and start asking the general public if they would purchase your product or service. It's important that you have an idea if your business is going to be viable in that sense. There's no point starting a business if nobody's going to buy anything from you. You're obviously in this to make money. You want to dip your toes into the market, find out if you have a demand for it, and then from there, move forward and actually plan your business. Don't waste your time planning around a product or service if there's no demand for it. All you're going to do is sink a bunch of time and waste a bunch of money on something that you're never actually going to get off the ground. Let's look at, do you want this to be a massive global business, or are you just trying to set yourself up with a comfortable lifestyle and maybe a quick exit? These are really heavy considerations when you're picking the type of business you're going into. If your goal is to build something massive on a global scale, you really need to look at, is this something that is really in high demand? And can I offer it better than most people out there, right? Do I have the capabilities to scale this on a global level? And when I say global, you could even be national. But did you pick the right product or service that you can truly scale into something massive? If that's your goal. That's really not most people's goal when they go into business. The average person that goes into business is usually just looking for a comfortable lifestyle, and they're looking to liberate themselves and have control over their life. If that's your goal, then you might want to consider, just kind of picking something that's in demand that you can easily scale quickly. In other words, if you want to go really, really big, you're going to look at a lot more pain initially to get it to that point. And you might be going up against some really giant competitors, and you're going to have a much more difficult time doing something like that and challenging the status quo with a lot of big corporations that have, very deep pockets, and you're competing against a different world, right? If you're just looking to set up something comfortable for yourself, again, I go back to services, but just offering a simple service in your area is a really easy way to build up some wealth, and you can continue to operate it, make a very good living, take control of your schedule if you do it properly, and really, you become a millionaire in your local area and enjoy a very comfortable lifestyle with a simple service in your area or a simple product online. Regardless what you choose, just bear this into mind when you're picking what you're going into. Look at what your competition is and look at what you're going to be measured up against. So this kind of rolls into franchising versus starting a traditional business. So I'm also a franchisor. I sell franchise offerings in the service category. So I sell systems, essentially. That's what a franchisor does usually, is providing a system and the use of their, essentially their name and their reputation. There's pros and cons to each, and this kind of rolls back to that. If you're trying to build something massive and global, you probably don't want to be part of a franchise system because you want to own that brand, right? You want to own that brand name. That's, again, sexy to everybody, but it takes a lot more commitment and a hell of a lot more time for you to grow something to that level where you become the franchisor or the massive corporation, like Coca-Cola or something like that. That's a much different endeavor than just trying to set yourself up with a business and a comfortable lifestyle and a good retirement. Traditional business, if you have those ambitions, would be the way to go. If you don't, I'm a big proponent of franchising. The reason being is franchising gives you a lot of the stuff we're going to go over in the next segment on this episode, which is planning your business, growing your business, and actually laying the foundation for your business. With a franchise, this stuff's already kind of built out for you. You get a turnkey process, and depending on the model you're buying, obviously, but you get a turnkey system that you can operate right out of the gate. So you're able to open your business and just follow the process and the guidance of your franchisor and let them help you set up your business with you. It skips years. It literally just skips years in your business growth. So yes, there's an investment. You have to pay the franchisor, but if you have the funds available, and again, your goal is to be more on the comfortable lifestyle, build a business and have a comfortable exit, franchising does this so much faster. Unless you have a lot of business experience. This would be the exception to that. If you want to start a traditional business and build something and scale it, that requires a lot of business knowledge. So if you reference back to your skill list that I alluded to in episode 1 and asked you to prepare, if you have that and that is listed where you understand just about every aspect of business, by the way, if you have that list, you've been in business for yourself. You're listening to this episode because it's interesting to you. But you've actually operated businesses to have that level of experience. So if you're a successful entrepreneur that has already been out there and has already established a business, understands how to make an operations manual, understands how to put processes in place, understands culture, understands all the aspects of building a business, then by all means, start your own business traditionally, right? And build your own brand. But usually, most people, and I'm assuming most of the audience listening to this, don't have the skills or the resources to put that together in a timely fashion. So what I would say is if you go to the traditional route, it's going to take you an additional, it depends on what you're doing, obviously. So I'll throw out some basic math, but, when I started Refresh, the first 4 years of my business was building the foundation. 4 years, guys. This isn't 6 months. It took 4 years to really build the foundation for the business, to get some brand awareness in the market, to have all the systems and processes documented, to find out what my identity was in my business and what my culture was around my team, to get those core people excited about the business model. All of this stuff takes time. You're starting from zero when you go into a traditional style business versus a franchise. When you start with a franchise, you get to walk out with most of the foundation already established for you. So again, in my example, if I had started a franchise business instead of building from the traditional level, my business in the local market would have grown exponentially faster. However, I happen to be in that first category where I want that big corporate structure, right? I've dedicated my life to business and I prioritize it above all else. Most people aren't ready to do that. And again, that's fine. Most people shouldn't do that, honestly, unless you really, really want to go through a lot of pain. So again, with a franchise model, you're shaving time off. That's what you're paying for. It's giving you an expedited jump. You're able to play off their already built brand awareness. You're able to utilize their systems, their training, so many things that are value in a franchise model. And that can extend even onto actual support aspects in your day-to-day, depending on the business you buy. There's another option that I haven't talked about yet, and that's purchasing an existing business. So there is an alternative to buying a franchise. And if you're kind of in the middle, so if you're mid-range, you have some business skills, but you haven't quite been out on your own, but you've been at a very high level, one of the ways you can do this without purchasing a franchise would be to go find an established business. But I would caution you, and then buy that business, but I would caution you on this in the sense that you need to know what you're looking for when you're evaluating that business for purchase. So some of the stuff I talked about that are benefits under the franchise model. If you're going to go buy an existing business out there in a market, you need to know what you're looking for as far as their processes and systems. Some of the key points you're going to look at when you're thinking about buying somebody's existing business is the size of it and the maturity of that business. You generally don't want to mess with anything that has a valuation really under about $2 million. If they're under $2 million, they probably do not have core foundational systems in place or a management team to where you can come in and just focus on doing value adds. So buying businesses it's a fantastic way to do it once you have the business acumen to do that. I actually plan on doing it myself in the near future. But buying an existing business, you got to look at what they already have in place, and if you can do a quick value add to that to increase the valuation on that business. So that would be your third option there on the type of business or the structure that you're looking to buy into. Let's move on to the planning section next. We're going to talk about strategic planning. Strategic planning is essentially your business plan. They're interchangeable. Some people call it a strategic plan. Some people call it a business plan, but essentially the same thing. Think of this as your core foundational document for your company. This is a living document. What I mean by living document is this is something you're going to reference back to regularly and you're going to update throughout the years. So this is something that you need to have in place, and it keeps you on the right track in your business. This is also a document you may need for financial purposes if you're doing any kind of lending or you're taking a loan for your business in any way. So if you're doing an SBA loan, you're probably going to need a strategic plan, aka business plan. I'm going to go through this. I have a bulleted list that I'm going to kind of skim through and go over. Just bear in mind that these are just some of the basic foundational things you should have in this. This should be one of your primary focuses when putting the foundation. And we're operating under the assumption that you know what business you're going into by this point. So you've decided what type of business you're going into, and you understand your finances and where you're at with your operating capital and your initial investment. So you know what ballpark you're in. You may not know the exact figure, but you know that you're capable of, gaining access to a couple $100,000, maybe $500,000, or you're starting from bootstrap level and you've got 10 grand. That's all going to come into play when you're looking at your business plan and putting this together. Again, kind of circling back a little bit, you also should be bearing that in mind on the business you select. Some businesses you can start bootstrapped. Other businesses, you have to have, a large capital reserve to get going. So I'm going to go through this bulleted list. I'm going to kind of go down these. If you need further clarification on these things, there's tons of books, reading material, but start educating yourself on putting this together. What I'm giving you is essentially the basics. I'll try to go into some detail on some of the subjects in here, but each one of these is going to require you educating yourself on how to prepare these sections.
Stay with us. We'll be right back.
Citizens of Distilled Wisdom, gather around and listen up. If you're a fan of the show and want to join forces with its host, Adam Ferracane, then Refresh Franchising is the perfect choice for you. So gather your courage, summon your inner superhero, and visit refreshfranchising.com to launch your heroic franchise journey. Refresh Franchising, the heroic choice for entrepreneurs, proud sponsor of the Distilled Wisdom podcast.
If you have a paper and pen handy, I would grab that and I would go ahead and note as I go through these bullets so that you get an idea, and then maybe search the internet for an example of a business plan that you can utilize to gather some of these. Also, bear in mind that some of the names, my titles for each bullet may be different on an example you find versus, what I'm calling them. So, number one, we have your concept summary. Your concept summary is essentially paragraph text. And this is you describing your business. So what are you doing? If you're starting a janitorial business, you're going to explain that you're doing a janitorial business, and then you're going to go into specifics about your business and what's the model? What's your general overview of your model? So think of this as your total overview of your company and what you're going to be doing. Make sure to include some details about your market size, size of the industry you're operating in, the type of, back to our example, if you're doing janitorial, the type of janitorial you're doing. Are you doing house cleaning, or are you doing commercial janitorial? Are you focused on office buildings? What is your janitorial business? And again, give a really clear overview of what the vision of your business is and what you're going to be providing. The next bullet is going to be your launch plan. This is summary text again, so maybe a few paragraphs, but you're going to summarize how you plan to start the business. So this is your initial launch, right? You're going to summarize if you're going full or part-time, how much time you're going to be dedicating to it. This is more for you than it would be for a bank, but the bank will find this stuff interesting. Are you dedicating yourself full-time? How do you plan to get this off the ground? Are you hiring staff, or are you going to be the sole employee initially? What's the timeline to your launch? This one's pretty important, and you should include, a basic timeline on what it looks like for you to get open. So this is time you're describing before you open the doors. So before your grand opening, what steps need to be done and how long are they going to take before you open the business? And this includes a lot of other aspects within the whole plan. So you can come back, and you might actually write this towards the end, but it should be early on in the actual document. So you might want to actually calculate out what your timeline looks to based on some of the other bullets we're going to go through, and write this section later on. Then you need a section about your leadership team and the roles and responsibilities. So this depends on how you're starting out. Again, if you're starting out with, a good amount of operating capital, you're taking an SBA loan, and you're starting with some money behind you, there might be other positions other than just yourself you're listing here. If you're bootstrapping it, it might essentially just be yourself that you're listing out your experience. Think of this like a summary of your resume for the most part. You're going to kind of outline your experience, why you're qualified for the role, and explain who you are as far as your professional career. This would also include any partners that you have in the business. And then from there, you're going to move on to the actual roles within this section. You're going to add the additional roles that'll be required for operating the business. So this might be managers, the technicians, if you're doing a service business. Are those technicians employees versus subcontractors? And you want to include a hierarchy chart. So you want to have who's reporting to who, essentially. The hierarchy chart, again, you want the base model of all the positions in an ideal situation that you would have to fill for that business. If it's you, you might be doing all of these positions yourself. If you're just doing this bootstrapped, you're the only employee out of the gate. This might just be you listed, but you need the roles themselves outlined and defined so that you understand as you get into your business what roles you're going to have to hire for and in what order. So this, again, think of it like a flow chart almost, but you're going to have, your president, CEO up at the top, and then you're going to have a row below it. And this row is going to include your managers, any kind of oversight team, right? Maybe a marketing director, things like this. Depending on the type of business, this stuff's going to change. And then you might have your employees and administrators and things like that below that. This hierarchy chart can get more complicated depending on the size of your business, but your initial one's pretty basic, maybe 3 levels. You've got your upper level leadership, and then your management, and then your employees, essentially the ones performing whatever the service is or distributing products if you're in products. So the next bullet on my list is foundational assets and deliverables. This is all the stuff that you have to have before you open your business. So kind of going back to that launch plan summary, how long is it going to take you? So again, back to your timeline to open. How long is it going to take you to get these deliverables? But this list is everything that you need to start your business. I have basic stuff on here, but depending on what type of business you're going into, this list can look very, very different. I have some of the core stuff that almost any business should have, and then I have some specific stuff for services, because again, that's mostly my space. But number one on the list is your operations manual. This is so overlooked unless you are going into an established business. Your operations manual is your Bible for operating that company. This includes absolutely everything in your business, how to perform every single task. You don't necessarily have to have this completely built out day one when you open your business, but you got to have a core foundational operation manual at least put together with some of the basics. As you grow, this is another living document you need in your company that is constantly updated, including how to do every procedure in your company. How do you do your payroll, for example, right? That needs to be in your operations manual, step by step, how you do your payroll, so that you can hand this book off to your new bookkeeper when you get to that point and you hire a bookkeeper so that they know how to do your payroll. This includes everything down to the service you're providing, the distribution channels if you're in a physical product. Every aspect needs to be in this operations manual. And I know I'm stressing this pretty heavily, but the reason I'm stressing it is this is one of the key deliverables that somebody would look for if they're going to buy your business. So this manual gives you value in your business. If you have the keys to the kingdom, right, essentially, and you can hand this book off to the new owner and they know how to do everything in your business, it's going to make that transition much, much smoother. And it's going to increase the ability for you to get a premium on your company when you do go to exit, AKA sell your business. The operations manual is key. Again, doesn't have to be perfect out of the gate, but you need a basic one. How are you going to do every aspect of your business? How are you, if you're in plumbing, how are you going to change a faucet, right? That all has to be documented. Next, I have your employee handbook. People confuse this with your operations manual. It's not the same thing. So if you've been employed with just about any company, right, any serious company, you've probably gotten an employee handbook or at least signed it in one way or another. But the employee handbook is not your operations manual. I'm going to step back. The operations manual is a private document. This is protected information about your company. This is trade secrets. This is how you operate your business, right? The employee handbook, on the other side, this is what your employees get. So everybody that works in the company, this gives them basic instructions about how to handle certain aspects of, dealing with the company. And it outlines essentially the rules for your employee. So it's essentially your rule book for your employees. But this includes your PTO policy, your sexual harassment statement that they have to sign, non-discrimination, things like that. So some legal protections. This includes how they are supposed to greet a customer, for example, maybe in there, or policies on smoking on a job site. These are just all examples. Everybody, again, if you've worked in corporate America in any way, you've probably signed one of these. I'm sure you can go get an example of this, and there's software out there that can actually help you prepare it based on the state laws. So if you use a software, you're going to pay a few bucks for this. Don't quote me on the amount, but you're probably looking at, like maybe $100, $150 or something for a templated handbook that you can plug in your state, and it'll ensure that it's compliant with state laws. But you do need this for when you bring on employees. Again, if you're working by yourself and you're starting, solo, You may not have to have it when you open your doors, but you might as well do it before you open your doors, because you're not going to have a lot of time if you're bootstrapping to get this put together when you go to bring on your first employees. Then you have training materials, kind of the same concept. Again, if you're bootstrapping, you don't necessarily have to have this to open your doors, but if you don't do them early on, early stage, when you go to bring on an employee, you're not going to have an idea how to train them. What these look like is going to really vary on the type of business you're doing, but you need to be able to train your employees. Anytime you bring on an employee, this includes, quizzes they have to pass in order to perform the service. It'll include, you could go as involved as, my materials, but you're only going to do that if you're really setting up, something relatively substantial right out of the gate. You got a lot of money behind you. But training materials are very important regardless. You need to be able to train your staff. If you knock out some of the basics, at least for the first few roles that you're going to have to hire for early on, it's going to make your life so much easier when you have to hire those employees, right? If you're starting with employees, you obviously have to onboard your new employees, and you need those training manuals or those training materials to start, to bring those people on. It's not as simple as just sitting down with somebody and showing them how to do something, though you have to do that probably too. Having documented materials, people learn in different ways, and having those materials is going to be very valuable for you. Next, under the foundational assets, I have digital assets. So this list is really going to vary depending on what you're starting, right? If you're starting an online shop, for example, obviously one of your digital assets is that online shop, but your website for a service business might be like 2 pages, where your online shop might take months for you to get all of the products and services in there correctly and optimized for SEO. Then you have stuff like logos, digital price lists, your social media accounts, having those all established. Back to the logo. So the logo is really important in your business. This is essentially the first step in your brand identity. And I wouldn't suggest you cut a lot of corners when it comes to your logo. You can do this. Again, if you're limited on budget, you can create this thing yourself if you're a creative person. But unless you're a graphic designer or a brand expert, creating the logo on your own may not be the best idea, because you're going to have to change it later. And if you have to change it later, that can be costly, because you have to change it everywhere on everything. And I'm speaking from experience. I designed my first logo for Refresh, and we had to completely redesign it. I did an okay job, I thought, but it wasn't prestigious and clean enough, and I had to bring in branding experts, and we had to hire people to redo it. It cost me a lot more than just creating a logo, because I had to change it again everywhere. It has to change on the website. It has to change on social. You might have content out there that has it on it. You might have price lists or other print materials that it's printed on, your business cards, so on and so forth. So changing it later can be costly. I suggest you spend a little bit on it, have some professional people on Fiverr or Upwork, and find some people to design multiple versions of multiple logos based on the name that you've come up with, and pick one that you think's going to, carry forward and look very professional going into the future. Next, you've got your supplies, materials, vehicles, things like that. So this is not a small line item depending on what type of business you're doing. For example, if you're opening a brick and mortar retail store, this could be huge. You might need, hundreds of thousands of dollars in starting inventory. If you're starting a service business, some services are very low on this end, and you just need some basic stuff, some basic equipment, and a truck or a van, right? To the flip side of that, I also own a carpet cleaning business, and just one of my carpet cleaning vans is about $85,000 outfitted. That includes the purchase of the van used, right? and vehicle prices have gone up. So that actually might have increased a little bit recently. So just stocking and supplying one van is about $85,000. So that's doing it properly. Of course, you could do it inexpensively and, or less expensive, not inexpensively, but less expensively and, purchase used equipment, stuff like that. But what I'm getting at is this is going to be a huge line item. Take your time going through that and make sure that this carries over to the financial aspect, which we're going to get into in a little bit. But you need to have a detailed list of everything you need and the cost of those. Then you have software assets. Again, varies by service, but some of the basics. You need, your bookkeeping software. How are you going to keep track of your books, your payments, your receipts, invoicing, things like that. You need a CRM system. A CRM, for those not in the know, is customer relationship management software. Think of it as your sales software. This is where your leads go in, your pipeline for sales is managed, things like that. Then you may need production software, routing software, other aspects. Again, some of these can be combined. Some of these, some softwares have multiple of these in it. Some of them don't. Your needs are going to vary depending on your business. I'm just kind of including most of the basics. You need a payment processor. How are you accepting payments? If you're doing all online, are you setting up a merchant account, or are you going to run this through Stripe? I would advise you not to run through Stripe. You're going to end up paying more than if you go find your own payment processor. Then you need payroll software, which you might be able to utilize your bookkeeping software, or you may have to find a different software for it depending on what you're using. So there's software assets that you got to have set up and ready to roll from day one. Obviously, you have to accept payments. Then you have accounting and legal work. So this list, again, varies by what you're doing, but some examples is going to be like your employment contracts for your employees. You're going to have to generate those. I mean, there's tools where you can do it online. Like an example would be Rocket Lawyer, I think it's called. And then there's LegalZoom and some others that can help you with this, but it's a good idea to have an attorney look those over at the very least. If you are going to draft them through one of those platforms, you want to make sure it's in compliance with your state, and then you may want to add your own stipulations that those systems may not include, like non-competes and things like that. Then you'll have customer contracts. You've got verbiage for invoices, a lot of different, legal mumble-jumble terminology to protect yourself there. You're going to have any licensing or permitting that you need for your individual, product, service, whatever you're providing. You need tax planning prepared. So deciding what type of entity to set up, setting up that entity. All these things are key deliverables. Are you are you a C Corp with an S Corp status? I'm going to end up going over some people's heads here, but you could also be an LLC with an S Corp status. There's a bunch of different strategies when it comes to preparing yourself for when your business is making money, and you should be doing that with a CPA. I'm going to go on a little tangent here when it comes to selecting a CPA and your attorney. These are two of the most important relationships you're going to have in your business. So this isn't related to the list, but it should be. I should add this to my list. And selecting your CPA and your attorney doesn't need to be in your strategic plan, but is a critical aspect of you being successful in your business. So finding a CPA that is very proficient and actually looks for tax savings without getting you into trouble is key. You should be familiarizing yourself with some basics about tax law at the very least, and understanding, the do's and don'ts of operating a business when it comes to, maintaining your books and things like that. What is really a write-off? Those types of things. But having the right CPA that can identify tax savings will pay for itself. And I know they're generally more expensive if they're good, but this is somewhere you don't want to be cheap. Find the right CPA and find one that supports you. Find one that, You're not just a number to them. That can be difficult also. And to switch over to the attorney, I absolutely hate most lawyers. I'm not a huge fan. I had a lot of poor experiences with attorneys, especially early on in business. And most attorneys out there are going to take your money and run, and they don't actually put a lot of effort into really doing what you're paying them for. So this can be a challenging hire, but if you find the right attorney, you'll win in the long run. And I'm not bashing on all attorneys. I love my current lawyer, but I had to go through about 4 of them to find the right guy. And finding an attorney that'll actually care about you and your business and actually put in the effort to make sure that they have your best interests at heart can be a challenge. So I would suggest starting early on this and really interviewing them in your consultations. If you're not getting a comfortable vibe with them, move on. Just move on. Find somebody else. Don't waste a lot of money and get bad advice or get them. Again, they'll just take your money and run. They'll promise you the world and then not deliver on it. So really think about those when you build those relationships, because these are 2 of the most important relationships to keep you out of trouble. All right, so next on our list, we've got marketing planning and budgeting. So this is the next part of your strategic plan is going to be your marketing planning and budget. You need 2 different budgets when you're putting your marketing together. You've got your grand opening budget, and then you have your ongoing budget. So your grand opening budget is that initial spend to establish, some dominance in the market. You're obviously not going to take over whatever you're starting right out of the gate, but this gives you a core foundation on getting some traction in the market. Grand opening spend is generally one flat amount that you're going to push out in a short period of time to really saturate as much information as you can afford out there in the market. The amounts that this could look like really depends on what you're doing and how competitive your industry is. So your marketing spend can be all over the place. In other words, we can't get into that here. I'll do other podcasts in the future talking about marketing spend and different industries. But your grand opening budget is one big amount that you're going to pump out there right when you open the doors or just before, maybe a few days or a week before, really boosting brand awareness. What you're going to spend the funds on your grand opening is really going to depend on the business also. It's hard for me to get specific unless I know what type of business you're doing. But an example of this is I'm in service businesses, but we do a lot of B2B, meaning business to business transactions. So my clientele, social media spend isn't necessarily the best utilization of my marketing funds. So instead, what we might do is, because we get reoccurring service out of these clients, we might just go do stuff for free and consider that marketing spend. So we might go do some jobs to show off our work and do that stuff for free. Another example might be, performing a trade show or something like that in our specific space to get our name out there right before we open and get some excitement behind our, up and coming business or brand new business. Then you've got your ongoing side to marketing, and you have to budget this out and figure out where you're spending this money. Anything you're doing in marketing, you need multiple different channels to bring you leads. So again, without getting specific, but you need to have this outlined so you know what you're able to spend every month and where you're putting that money. For example, blank amount going to social media ads, blank amount going to in-stream Hulu ads, blank amount going to public relations, blank amount going to trade shows, blank amount going to promotional offers, blank amount going to, and on and on and on. So you want to make sure that your entire budget is allocated and correct, and then you want to measure this, by the way. So that's where this comes in. I told you this is a living document. You're going to want to look at the results, and again, this isn't a marketing course, but you're going to reallocate that budget very regularly. I'm on the phone with marketing just about every day. So marketing is one of the most important aspects of your business. Next, you've got your budgeting and forecasting. So you need a written version of this section, but you also need spreadsheets with your forecasting. This one I could sit here and talk about all day long because this one's fun. Talking about your forecasting is fun, assuming you're doing well. So if you're following me and you're listening to my advice, forecasting should be fun for you. But budgeting and forecasting, the budgeting part's not as much fun because that's spending money, but forecasting can be a blast. I could make probably a dozen different podcast episodes talking about this aspect, but I'm going to bullet out some basic stuff about it. The first section of your written portion of this needs to include a summary on your initial investment costs. This also carries over to, your spreadsheets where this is all broken down. So we've already alluded to some of this stuff. You have like your inventory, you have, what it's going to cost for that logo. A lot of the other stuff we're talking about in this plan, your key asset deliverables and everything in the beginning. You got to have those costs. You got to have a summary of those costs and what it's going to cost to go into business. So this is your initial starting investment, right? You're looking at every penny, including covering your own personal expenses if you're leaving your job while you're setting this up. Every penny on your startup needs to be worked into your initial investment or your startup costs. Then you need to work this in. This goes with your startup costs. This needs to be included with it, but you have your operating capital requirements. This is how much money you need to have liquid. And by liquid, I mean money in the bank, cash. This has to be cash money that you have access to operate your business. This is where things start getting, like I'm bootstrapping. I don't have any operating capital. I'm starting, with $5,000, $10,000. Well, if you're in that situation, that means that you're going to probably be spending the next couple of years putting every penny that you make into this fund so that you can get it to a sustainable level. Because the banks usually are not going to give you money for the first 3 years in business if you're starting something the traditional way, right? There's exceptions to that. If you're acquiring a business, you can get an SBA loan to purchase an existing business because they're going to use the existing business's finances to help fund you, right? They're going to take the health of the existing business and they're going to look at your personal standing and where you're at, and you're going to have to put a down payment down, usually about 20%, and then they'll give you the bank loan to buy the business, and you can often work in operating capital for that, right? But if you're starting the traditional way, you're starting a business from scratch, you're not buying a franchise at this point, you really have nothing except this business plan to bring to the bank and your personal credit. So if you have a lot of equity in your home, you might be able to leverage that on a loan. But overall, getting financing, starting, again, that traditional business can be very challenging. So if you're bootstrapping, you might have to save for a little while. You might have to prove yourself to the bank, right? Put that money in the bank, show them you got liquid capital in the bank saved up and that you've been working for the last 3 years to get that foundation in there. And then the bank will start opening up with you and possibly give you a line of credit. But your operating capital needs to cover, at the minimum, 3 months of everything you need to run your business. This is assuming you're not making any dollars, right? So whatever your COGS are, cost of goods sold, this includes your payrolls, everything, right? So you need to have every expense that's going out every month, your payroll, your employees' payroll, the electric bill, the lease, absolutely everything rolled in. And then you need ideally 6 months, but at a minimum 3. Again, ideally 3 months of operating capital, but ideally 6 months. By the way, if you get to this part and it starts becoming outside your budget, that's where you got to start looking at, alternatives and making changes to you may need to change the type of business you're going into Or you just may have to start looking at your planning and see, it's going to take a little bit longer, and maybe you have to go do a little more bootstrap level than you expected. But in a perfect world, you're starting out with everything that comes out in this financing, and don't lie. Don't start going into this and lie to yourself and say, oh, I only need this. Be realistic with your numbers, as realistically as humanly possible. Then you get to do the financial forecasting. And again, I would suggest reading some books. I'm not going to dive into this too deep right now, but this is the most exciting part of your business. You want to forecast out the next 5 years. And this section is obviously living, and you're doing a lot of guesswork initially. You're doing educated guesswork. So you're going to understand what margins look like, and you're essentially going to build out a version of a P&L, profit and loss, for your business, even though you're not operating. And you're going to forecast out your revenues based on, the industry margins. And you're going to figure out where you're going when you're profitable, right? By the way, it's not unusual for a business to forecast out and actually not show profit right away. It might take years. Ideally, it doesn't take years, but it's not unusual for companies not to be profitable in year 1, year 2. But you get to look out 5 years, and again, that 5-year mark can look pretty exciting. But this section should be updated regularly. So when you start getting real data after you've actually successfully launched your business and you're operating, you're going to want to look at everything that went into that fictitious P&L and replace it with a real P&L and forecast out utilizing real numbers. And this includes adding in payroll, right? So as you forecast out, you're going to add in, when you hire a manager, that salary needs to come into play. And when does it come into play? Do you hire this manager in month 18, and then his salary or her salary, their salary starts calculating out from that point, right? And so this all has to be calculated into your forecasting. I suggest you get help with this unless you're really proficient in this area. Forecasting can be pretty challenging, and you want to really make sure that this is correct, because you're in business to build value in the business and to make money. And if your forecasting is wrong, that can sink your business. And then you have your funding requirements. So you've got all this math put together. You've got your budgeting and forecasting put together. Then you're going to compare it to what you currently have on hand. And you're going to figure out what you need as far as funding. This is going to give you an idea of what to ask for the bank. And then I'm going to give you a pro tip here. Go ahead and add 20, 30% to that, because it's always better to take a little bit more money than it is to take less, if you can get it. So when you go into the bank, based on what your math is, if you can get a little bit more from the bank, take it. Having a little bit extra operating capital to cover incidentals that you didn't think about is always a good idea. However, if you did the math and you come back and you look at it and you're not going to qualify for the amount on there, again, this is where you start reevaluating the type of business you're going into, or the method in which you're starting that business, or the level. If a lot of this stuff on the episode, went a little bit over your head, or you didn't fully understand it, I apologize. It's a lot of information to cram into a short episode, and it's very difficult for me to get very detailed on this without this episode rolling into, 6 hours long and explaining every single bullet on here. One of the benefits of franchising, and I know I alluded to this earlier, and I'm going to keep doing it because I think it's one of the best ways for people to truly build wealth if they've never run a business before. One of the benefits is you get a lot of this stuff handed to you, and you have somebody there with you guiding you through all of this. So you don't have to do all of this stuff yourself and try to figure it out and waste years trying to put all this together and get it all hammered down. You have somebody there that can coach you through it. But that'll be the last pitch I have for you. This was the end of this episode, and we have one more installment coming on this series of leaving corporate America. And in the next one, we're going to talk about actually launching your business. I really look forward to that one. That's going to be an exciting episode. This has been Adam's Corner, my chat with you. 101.
I'm Refresh Man, and I'm here to empower you to take charge of your destiny. Are you tired of working for someone else? Do you dream of making a difference in your community and unleashing your full potential? Then look no further than Refresh Franchising. With us by your side, you can start your own heroic business venture with the unwavering support and cutting-edge resources you need to conquer your goals. Our franchise model is like a super serum that will give you the strength to succeed. Refresh provides extensive training, ongoing mentorship, and an established brand with a loyal customer base. Plus, you'll become part of a heroic league of entrepreneurs who serve as allies on your journey towards greatness. And the best part, you won't have to waste time building your business from scratch like some kind of neophyte. With Refresh Franchising, you'll hit the ground running at lightning speed and unlock the key to heroic financial success. So gather your courage, summon your inner superhero, and visit refreshfranchising.com to launch your heroic franchise journey. Always remember, together, we can achieve greatness.